What's up, everybody? This is Corey with Mission Side Hustle, and today I'm showing all of you guys my personal real estate investments that I have and currently operate. I'm going to be showing you guys the real numbers, what they're making, and what the future projections are, assuming normal operations. In addition to that, I'm going to show you the difference between when I was house hacking those properties and when I converted them to fully investment properties. And the best part is I'm going to show you guys how you could do it too with just normal financing. Nothing crazy, nothing overly creative, just traditional financing can help you guys break into it as well. So the first property we're going to head over to and show you guys the inside is a duplex that I have, and my wife and I currently use it for Airbnb. The only problem I have getting there is because you guys know I'm a high-level entrepreneur with a moderate-sized business and real estate investments. I gotta pick what car to drive. I mean, it's a tough choice. It's like Beamer, Benz, and Bentley. Am I right? Check this out. Beamer, Benz, Bentley. Or as I like to call it, speed, style, sex appeal. Let's go with speed. All right, so we just pulled up. I'm gonna show you guys the insides of the units because I don't wanna show the exterior just to retain some sense of privacy on the property. But let's go ahead inside. I'm gonna show you guys what these units look like, tell you guys what I bought the building for, what they're making, what it's worth now, all the financials. It's gonna be really important for you guys. And then again, I'll tell you how you guys could get into a property just like this. One thing to keep in mind, I gotta give you guys a shameless plug. I do have my real estate license, so I'm gonna go and put my email to my real estate account on here. If you guys have any questions about real estate, or if you're in Florida and you're looking to buy or sell into some sort of house hacking property like this, or anything of the sort, just email me. I'd be happy to talk to you guys and help you through it. I love it. I love talking about this sort of stuff. So just shoot me an email and I'll be happy to help you out. Well, let's go ahead and inside and show you all that stuff. All right, guys, welcome to one of my units. This one's a really small one. I like it a lot. It's actually a 2-bedroom. It's only about 750 or 800 square foot. It's a small little reminiscent of like an apartment. So it has a combined living space and then also a kitchen. You guys will see everything in here was updated. I can't take credit for the renovations. They look really nice and they're done really well, but I did buy the place like this. My wife and I just furnished it and designed it overall. So all it is you see in here is this living space and the kitchen. Then when you go to the side over here, so on this side you'll have sort of a larger bedroom. We keep it with a queen bed, and then on this side over here we have 2 twins and a slightly smaller bedroom, and then right here you have the bathroom. It's a very compact design, but I like it that way, and I'll tell you why. You see, one of my biggest fears and ongoing concerns when I'm running a vacation rental is if people come here and try and have a party, or if young kids rent it out and they try and just do some crazy antics here. So when you have a smaller place, it really cuts back on that because it limits just by nature the capacity that it's gonna fit. People aren't gonna naturally try to book a small place to host a really big party. Doesn't mean it can't happen. I've rented bigger places before and we always had more problems when we had a bigger property that we are renting. So there's 2 strategies with a place like this. We actually house hacked this property, and I'll take you guys over and show you the 3-bedroom side because we did live in the 3-bedroom side for a while too. Right past that wall. So the timeline is that we actually lived in the other property here, and we used to just operate this place on site. It was really easy because we were right here, but now we are renting both sides and it's a full-on investment property. Now, we could have done long-term, but we like to do short-term, and there are pros and cons to each of those. If we're being honest, the main pro about short-term rentals, it's way more money than long-term. I also like that the turnover is a little bit quicker, so if you have a bad guest, they're out of here in generally just a few days, compared to if you have a bad long-term tenant, you're gonna be holding on to them for like a year. And also, maybe a bit counterintuitively, there's less wear on the property, at least in my opinion and in my experience. Often people come here, drop their stuff off, and they're out doing their thing all day long versus someone who lives and rents a property long-term. They might be here all day long, just scuffing the place up, doing whatever. So vacation rentals, we find that we have less wear on the property. Not always, there's times, trust me, but generally less wear on the property. One of the major cons I have to say with vacation rentals compared to long-term rentals is that the standard for upkeep is much higher. People are coming here for an experience, they're coming here for vacation. So I've had to reglaze this bathtub and this bathroom twice because the first time it flaked a little bit and it just didn't look that great. A long-term tenant wouldn't have really cared, it wouldn't have been a big deal, but when people are coming here on vacation, if you got scuffed up walls, if you got flaking paint, that stuff does start to wear on the outcomes of the property, financially, the reviews, all sorts of stuff like that. And all that stuff combined, the upkeep standard is much higher, and that can kind of get exhausting keeping up with that. Additionally, and sort of on the same topic, it does take a lot more management to run a place like this. We do have cleaners now, we outsource all that out, but I did used to come here, my wife and I, and we'd clean this property ourselves, and it's just a lot of work and it's a lot of time. It's a lot more money, like I said, but it is more management doing it this way than long-term as well. Now, before I start telling you guys all the financials of this property, let me take you next door, show you the 3-bedroom unit, just so you can get a comparison for what this roughly 800 square foot unit looks like with 2 bedrooms, 1 bath versus our 3-bedroom with 1 bath. Let's head over there. Oh yeah, also I need to set your expectations. We had a guest leave earlier, so we currently have a cleaner there right now, so it's probably not gonna be as clean and in tip-top shape as this one, but you can still get a rough idea of what it looks like when it is clean. Hey, how's it going? Hi. It's Corey. So let's talk about the part everybody wants to know. The money. We bought this place about 2.5 years ago for $255,000. The current estimate on this property is $332,000. That gives us an appreciation over the course of 2.5 years of $77,000. Now again, this is not always normal, but that is quite telling because multifamily properties like this typically depreciate a little bit slower than single family properties. So if you think that's a lot in 2.5 years, just think about some of the single families have been doing around this area too. Now there's 2 aspects to the financials. There's the appreciation side and there's also the cash flow side. So in 2019, we didn't run this as a full-on investment both sides. Only one side was fully an investment. So for 2019, uninterrupted, no pandemic, we did $42,250 in gross revenue. In 2020, we had both sides running, but we did experience the pandemic. However, we still did $46,285 in revenue. 2021, we're only about halfway through the year. We don't have reservations for the tail end of the year, and we've already collected and expected a total of $51,350. So the numbers are climbing. This year's our first year to be expected to be fully uninterrupted, and we're still dealing with some of the travel problems with the pandemic, but it's showing really good signs of recovery and really good signs of growth. Now those numbers sound really good on its face, but there are expenses for this property too. To save you guys some of the headache of calculating everything, just know our monthly cost of this property for all the bills, I'm talking mortgage, insurance, taxes, utilities, internet, Netflix, everything, it's about $2,500 a month. So when you take that $2,500 a month, multiply that by 12 months, that's $30,000 a year. Now, that's the base cost. We also pay for cleaners. Let's just say it's about $1,000 a month, which brings us a total of annual expenses coming out of roughly $42,000. So anything above $42,000 is straight cash flow, not even considering the appreciation and not even considering that out of that $42,000, some of that is paying down the principal of the note as well. And you just gotta think about that. There's so many ways in real estate to be making money through appreciation, the cash flow, the principal pay down on the note for the property itself. There's a lot of opportunity here, and that's why I'm so passionate about talking about it with you guys. There you guys go. That's what next door looks like. I do wish it would have been clean for you guys, but it's very hard to get over here on a day where both units are vacant and cleaned already. It just doesn't really happen. These places stay booked quite frequently, so that would have been pretty much impossible to get over here on a day where they're both vacant and clean, so I can show you guys everything. But at least we got one of them. But let's do this. Let's go ahead and head to my triplex now, show you guys the property we're house hacking. I've done a video before where I talked in depth about the house hacking, so if you want to see that, I'll put a card up so you guys can click on that link and check that out. But I'm gonna take you guys back to the triplex, show you the Airbnb unit that I've been working on next door and how that's gonna impact the financials for that property. So let's head on over there now. All right guys, so now we just got back to the triplex here, and I want to tell you a little bit about my investment strategy for this property, what I bought it for, what it's already appreciated at, what we're doing with all 3 units. We're living in one, we're renting out the others, but I'm gonna tell you what exactly our plan is. So let's go ahead and head inside to one of these units and show you what we're doing. What's this? So I do gotta admit, one downside with this video is I was really hoping to have this unit finished before I released this video. So currently right now, we've been painting this whole place. This is a 2-bedroom, 1-bath unit in our triplex. It's a shared wall for our unit, which is right over there. We live in that side and we're gonna rent this one out. We had 2 long-term tenants in it. However, one of them has moved out, and in place of it, we got some new furniture, and we're gonna turn this into an Airbnb. So I just wanna show you guys the painting. We painted it white with some blue accent walls. I'll take you to the bedrooms. Gotta lighten this place up a little bit. I just installed, oh yeah, we're painting the exterior, so our windows are also blocked up. I forgot about that. A little extra light in here. There we go. So this is one of the bedrooms here. We're doing 2 twin beds. It's very similar layout to the property you guys saw earlier. So I have 1 bed I've already assembled. I've got another one here that I'm gonna do probably in the next couple days and put a twin bed there. Make this kind of like a kid's room or like younger adult room. And this one over here, it's a bigger unit, and this is the one that we're gonna put a queen bed in, dresser with a TV, things like that. Just installed the blinds. We just finished up the paint. So this place is coming along pretty well, but I'm most excited about one thing. All right, so let's talk about how we're gonna operate this property as a whole and what we're gonna do individually for this unit and the other ones. So just about 8 months ago, I bought this whole building for $440,000. Since then, it's appreciated to $485. That's a $45,000 appreciation in 8 months. Now, if you're impressed by that, just wait till I tell you this part. I bought this building with my VA loan because I was in the Air Force for 4 years. So the only thing I had to pay for this property was about $8,000 in closing costs. As it stands right now, assuming that we do 2 long-term rentals, it cost me $2,800 a month between all of my payments for the mortgage, the interest, property taxes, you name it, everything, including water, sewage, and trash for the entire building, $2,800. I could rent each unit, let's just say for $1,000 for an easy number, which means it cost me $800 to live in my 3-bedroom, 2-bath unit, 1,600 square foot unit with a family of 5. That's a great deal, but it could be better. And what our plan to do here is to continue to live in 1 unit, turn one of these into a short-term rental. That's gonna raise our monthly cost a little bit because I have to pay for another like Netflix account, electricity, probably upgrade the internet, all that sort of stuff. And that's gonna put us at, let's just say, $3,000 a month. However, now we're gonna go from renting 2 units for $1,000 a piece to renting 1 unit for $1,000 a piece, and then grossing roughly $2,500 in short-term rents on this unit, which gives us a gross income for the month of $3,500. And assuming we do all the cleanings ourselves, which we likely will since we live right next door, it's not that inconvenient, that means we're gonna gross $3,500, we're gonna pay $3,000 a monthly cost, so it means we're actually gonna positively cash flow $500 living next door, which means we're living for free. And not only that, we're making $500 by living there and operating an Airbnb and 1 long-term tenant on this property. Not even including those factors, this is how you guys can create large amounts of wealth for yourself over time. It's not always a fast road. Sometimes bad things happen. I've had to replace AC units. I've had to replace entire plumbing systems. There have been big expenditures at these properties when I've had them. However, if you take it all as an aggregate over time, I have done far much better than if I never would have began with in the first place. So how can everybody do it? That's the question people want to know. Not everybody has access to a VA loan. Not everybody has a bunch of cash on hand to do a conventional. So I did want to talk about some options that might work for you guys. First things first, the very first property I bought was a single family home. It was not a big multifamily property or even a small multifamily property because they're often more expensive. We did own that property for a few years and some appreciation happened as a result, which allowed us to move into these bigger units. So my advice for you guys, especially if you're young, is just start early and just start small if that's what you can get into. It's good to have roommates. I did a whole video on house hacking. I've already talked about it. That's a great way to get started with real estate investing, especially as a beginner. It can cut your living costs and allow you to start saving money for those down payments for larger properties. Now look, there's some other options too. Maybe you've already got a little bit of money saved. The 2 options that are my favorite for me is the FHA loan and the VA loan. If you weren't in the military, sorry, that one's not gonna work for you, but you still have the FHA. The FHA loan will allow you to buy any property up to a cap. It's around $460,000, $480,000 roughly, but it will allow you to buy a property for as little as 3.5% down. Now, I'm just scratching the surface on these mortgage products. I'm not a mortgage broker, so you would want to talk to a professional in that space to get more clear and accurate information, but I am giving you guys a rough idea to go off of and just get the wheels turning a little bit here. The FHA loan is a product that will work for most people, not everybody, but it does open up home ownership to a lot more people than maybe a conventional loan or having to rely on a VA loan if you don't have access to something like that. I didn't mention this earlier, but when you're buying a multifamily, you can actually use the projected long-term rents to help you qualify for that property as an income source too. Another caveat is that with a conventional loan, you can only use 75% of that income to help you qualify. But I do believe with an FHA, you can use up to 85% of that projected income. Again, long-term, not short-term. Long-term income, you can use 85% to help you qualify. Just to give you guys a realistic example, let's take the property we went and looked at earlier, the first one, and just say if you were to buy that with an FHA loan, you would have to have a down payment of $11,620. That's the 3.5%. You'd also have to factor in some closing costs too. Let's just say roughly $6,000 or $7,000. So to buy a property like that, it would cost you $18,000. Again, that's why I said you might want to start small. And that's also why I have this channel to show people how to start making money on the side and grow their wealth so that they want to get into real estate investing. It takes time to get there, but you can definitely build up the money over time. I've been doing my channel for about a year and a half, and we have roughly a net worth approaching $20,000, which puts us in that range to buy a property just like that we're talking about right now. Now, one of the other mortgage products that's available is a conventional loan. I don't really think it's the best option because when you get into multifamilies, the down payment requirement is very high. It's 15% for a duplex and 25% for a triplex or a quad. Those numbers are a little unrealistic for most average investors that are looking into breaking into the market and just getting started. So that's why I really wanted to heavily talk about the FHA and the VA loan possibilities. So I'll leave you guys with this. Real estate, in my opinion, is the best way, and it's my favorite way to start building wealth for yourself over the course of time. If you guys are interested in learning more about these multifamily properties, something like this, a triplex, or maybe a duplex that I showed you guys earlier, please go ahead and shoot me an email. I'm gonna include my email in the description. So if you guys are interested, especially in the Tampa Bay area, I'm a real estate agent. I can help you guys find something. I can help you guys get started down this path. It's something I'm very passionate about. You can see I do it myself. I'd love to help you guys out. And even if you're not here, I can still help you guys out. Just ask me questions if you have questions, and maybe I can point you in the direction of somebody that can help you wherever you're at. And anyway, guys, thanks so much for watching. We'll see you guys next time.